Have you ever just stared at a trading chart and felt like you were completely guessing? Yeah, you're not alone. The market can feel like absolute chaos. But what if there was a way to filter out, say, 90% of that noise? Well, in this explainer, we're going to break down a simple, actionable framework that's designed to do just that, to find those rare, high-probability moments and get consistent results.
And look, this isn't just some theory. This is the exact framework that led trader Craig Bakoko to say he had, and I quote, one of the best trading months of my entire career, and he was only trading a few days a week. So what is this A-plus strategy all about?
For a lot of us, the market just feels like nonsense land, right? It's a place where you're guessing, you're driven by emotion, and your results are all over the place. The whole goal of this framework is to cut right through that noise and give you a clear, simple map to follow.
So what's the solution? It's this A-plus framework. And it's not about magic or trying to predict the future. It's a really simple two-part system. Part A is about figuring out where to even look, and Part B is all about knowing when to pull the trigger.
This slide just nails the difference. Instead of operating in that chaotic no man's land where everything feels random, the A-plus framework acts as your systematic filter. It's about creating a repeatable process that focuses only on the high probability areas instead of just taking a shot in the dark and hoping for the best.
All right, let's dive into Part A, finding the right playing field. Before you even think about placing a trade, you first have to identify something called an opportunity zone. This is the specific area on a chart where the potential for a really big move is at its highest. Now, the key thing to get here is that an opportunity zone isn't just some random spot on the chart. It's specifically the moment a trend starts to break down. This is one of the earliest signals you can get that the whole market dynamic is shifting, giving you a chance to get in right as a new move is about to kick off. And spotting one is actually pretty straightforward. You start by just drawing trend lines to see what the current trend is. An uptrend is making higher highs, a downtrend is making lower lows. That moment the price breaks cleanly right through your trend line, boom, that's your opportunity zone opening up.
Okay, so you've found your opportunity zone. The trend is breaking. But, and this is a big but, you don't just jump in blind. This is where Part B comes in, the filter. It's a simple 3-point checklist you run through to confirm if the trade is actually worth taking. And this is typically something you'd use after 8 a.m. when the market really gets moving.
The checklist boils down to 3 simple questions. First, does the momentum actually support a reversal? We check an indicator called the RSI for that. Second, has the market structure really broken? We look for a specific shift. And third, is there a clear, precise entry signal? Let's break down exactly what we're looking for in each of these steps.
First up is the RSI. The easiest way to think of this is like a momentum gauge. If the price has been falling hard and the RSI drops below 20, that's considered oversold, a hint that the selling might be exhausted. If it's above 80, it's overbought. This just adds another layer of confidence that a reversal might be on the table.
Next up is the change of character, or COCH for short. It sounds a little technical, but think of it as the market waving a little white flag, telling you that the old trend is officially struggling. For instance, in a downtrend, if the price suddenly pushes above the most recent high point, that's a change of character. It's a really powerful signal that the underlying trend structure is breaking down.
And the final piece of the puzzle is your entry signal, the fair value gap. This is a specific 3-candle pattern where a really fast price move leaves behind a little inefficiency. The market hates a vacuum, and it often revisits these gaps to fill them in, which gives us an incredibly precise area to plan our entry.
Now, we've covered the how, but the real secret to why this all works? It isn't about having a crystal ball. It's all about risk management. It's about math, not magic. This quote gets right to the heart of professional trading. It's not about winning every single time. It's about setting up your trades so that when you are right, your wins are just massively bigger than your losses when you're wrong.
To put that in perspective, one of the example trades using this framework returned 7.7 times the initial amount risked. In trading, they call that a 7.7R trade, where R just stands for your initial risk. So what does that actually look like in your account?
Well, here's where the math gets really, really powerful. Risking just $50 on that one trade would have brought back $385. Risking $500 would have turned into over $3,800. This is the power of asymmetric returns, where your potential upside just crushes your downside risk. And this, right here, is why the whole thing works. With a single win like that, you could be wrong 5, 6, even 7 times in a row on other trades and still be profitable. Your success isn't defined by your win rate. It's defined by the size of your wins versus your losses.
But of course, in the real world, not every setup leads to a massive win. The market is going to do what it wants to do, and that's where the final piece of this puzzle comes in: discipline.
This slide shows two real trades that followed the exact same A-plus process. One was a textbook winner, netting a 5.5 times gain. The other was a perfect setup, where all the rules were followed to the letter, but the market just decided to turn against it, which resulted in a small, controlled loss. The key takeaway is that the process was identical, even though the outcomes were completely different.
And this brings us to the fundamental truth of trading. You have zero, and I mean zero, control over whether any single trade is going to win or lose. But you have 100% control over your process, your entry rules, your stop loss, and how much you risk. That is where a professional trader focuses all their energy.
So that leaves us with one final question to think about. Is your real goal to be a fortune teller who can predict the market's every little move, or is it to be a disciplined operator who just follows their proven rules day in and day out? Because believe me, the answer to that question changes everything.